Hello, Warriors. Dale Pinkert here at TradeGATEHub.com, powered by TradeView Markets. I want to start off with the S&Ps and take you back to Tuesday's show I did with Mike, and we were sitting at this support here at 45.55, giving up. We were right here, and Mike was showing, I believe it was a daily at that time up here, and I said it looks like it's sitting on a ledge, Wile E. Coyote. That was here. So 100 handles later, here we are sitting at this important level coming up, especially on the daily. If you've been following my videos, I pointed towards this was the day that Jay Powell became a super hawk, and the market held up very well. And I said that this was going to be a very important support level. In fact, Mike and I talked about that a pullback could be healthy or would be healthy back towards 4,400 support. So actually, it's not a coincidence that this low is at 44.24. And now you have the 200-day within a handle of that important level. So this is going to be a very critical test for the S&Ps this week. Of course, the pressure is because we have sharply higher yields. They way overdid what I was expecting in yields for this wave. But I've seen some analysis. I do a lot of intelligence gathering, and a lot of people here that I talk to are saying that the bond market bearish move could be completing and due for a correction. So that could be a headwind that maybe dissipates for the market. Should we hold that level? We're only about 40 handles away from that level. Perhaps we test it tomorrow and get some type of turnaround Tuesday. But to me, this is a bull bear line in S&Ps, and we close under the 200. That opens the door to retesting a wedge line breakout, which sometimes markets do. I think it's going to make the market pretty vulnerable, but that would take it back down towards the 4,200 level. When you look at NASDAQ, perhaps we're going to get some type of right shoulder. Here's your left shoulder. Here's your head. Right shoulder would come in if it has symmetry around 13.7. So that's going to be an important area. As you could tell, the NASDAQ is already trading under the 200-day. It's the weak sister. Part of it would be, I know I sound like I'm doing the stock market, would be to keep an eye on the semis, because they were even weaker than the NASDAQ. But they look like they're setting up a 3 drive to a bottom formation. So there could be a scalp on the long side of the semis here. Let me just find them for you. SMH, where are you? Here we are. Okay, so we're trading. And here's your daily. So I was looking at this, and it looks like we could have a 3 drive. This is on the daily. So here's your drive 1 right here, right? And then here was your lower low that actually had a little 3 within the second drive, and we had a higher low. And now we're about to take out that low, and it looks like we're still going to have a higher low. So if you're a stock trader and you want to buy something that's out of favor, you could consider looking at this as a 3 drive to a bottom formation in the semis, which are going to come in down around the lows there. So 225 or so should be support. That says there's more downside. If the semis do that and the NASDAQ doesn't make a new low and puts in that right shoulder, we could be set up for a bullish April. April isn't over. But, I know that this video is also broadcast on FX Street, so I am wearing the American flag today, but this shirt, actually the title is America in Distress. So right now it looks like Europe's in distress because we're looking towards the ECB, and are they going to come in a little more hawkish? Last week, while the dollar index made successive higher highs, which I talked about on Wednesday, that we would make higher highs. We had this breakout. It still looks like it wants to make a push, but I think this is a terminal wave that we're getting. Maybe get to par and a half, maybe 101, and possibly we stall before that. So the euro on Friday held, did not make a new low. It was down here, it's 88.6. So regardless of whether or not we may take out and flush out the stops under 108.06, this is really the messenger to me. So you see that how much we retraced in the euro? Almost a full-blown retracement, right? You'd have to put your cursor there to see if we held the low if you were a little nearsighted. But you don't need any kind of reading glasses to see that euro pound has held up exceptionally well with all the pressure that's been on the euro. And to me, this is a leading indicator of what could happen with the euro. I always expected, and if you've been following me for a while, I wanted to see the market make new lows without the euro, with the euro making new lows and euro pound not. So we might even get another example of seeing that, maybe if the euro really gets tanked because Lagarde is still dovish. Maybe we retrace to 78.6, but I'm not looking to buy the dollar up here in any way, except the yen is a monster. But at this stage of the recovery, I think that we're in a terminal phase of at least this stage of the dollar rally. If you are conservative, all you have to do is just wait until the triple top, 1, 2, 3. You don't care how high it goes. You know where it turns bad. Okay, so if you're long, you could bet that there are a lot of sell stops under the breakout. And if we end up with a false breakout, look at where the moving average comes in at another major resistance level at this support level of 97.20. So whether or not we make new highs in the dollar, new lows in the euro, I'm looking to be a buyer as a dollar, if the dollar continues to strengthen, and even if it doesn't, and looking for add-ons on a confirmed break in the dollar. And in euro, confirmed bottom in the dollar would be again back over this 110 level. So 110's a magic number for it to start doing something right to the upside. And it could be what's called an ending diagonal. This is a wedge that would get it back inside the wedge line. The only bearish thing I can come up with, and it is part of my teachings, is you see the low in the euro we had back here. It was a confirmed low. So, you know, it was, I'm not sure what the RSI reading was back then. Looks like under 20. So definitely under 30. But this time, should we make a new low, there's no way the daily would confirm. In fact, if I look at the 4 hour, not sure that this would confirm either. So call me a dollar bear from here out for the next several quarters, I believe, and looking for at least a correction in the dollar back towards 1.95. And euro, I think, could see 114 before it runs into a lot of resistance. That's up here. So, you know, I'm not ready to start talking 120, 130, but over 110, I think you have, you know, 113, 114 coming in the euro. So something else to keep an eye on is, you know, the commodity currencies are under a lot of pressure. I think there's probably more downside in commodity currencies, which, you know, trade a lot with risk. So, and, you know, and here we are, as I'm on the air, we're getting close to this, we're not that far away, 44.20, another 30 handles, and we're at this 200 days. So, God, it'll be great to be on with Mike tomorrow, because we might have the setup for a turnaround Tuesday. So I know that the metals look great to everyone right here. Gold, you know, still is, I think, a 3-wave correction. I'd be surprised to see it close back over 2,000. That'd be a good psychological signal. I still think there's a shot that this could be a failing rally, maybe up towards the 1980 range, and that we will eventually take out these lows. Silver's acting better, outperforming, and a lot of people are looking at this and calling it a breakout, and they have every right to do so. I don't trust it. So I actually think that a dollar peak and a peak in yields will not be bullish for metals because as you notice, gold and the dollar have been going up with yields rising. So I know it's counterintuitive that we could have the dollar sell off and metal sell off at the same time, but it was also counterintuitive that we could have had this dollar rally along with a gold rally. So we'll see how long that delinkage works, but it looks negative to me unless we start closing back over, say, 26. Then it's probably on its way. So not short yet, but I believe that we're going to have new highs in a lot of the gold shares. Now look at, here's the gold, and this is a bullish long-term signal, but not short-term signal. So gold not even close to that spike high, but I'm sure when I pull up a couple gold issues, well, they're not setting the world on fire with gold up this much. Here's GDX able to make a new high, but as I suspected, you're getting some divergences here. That's GDX, and here's Newmont. Newmont, again, look at the difference between the RSI reading here and where we are now. I'm not saying there can't be a little more continuation, but the gold stocks also are diverging. So here's your silver. I'm not impressed with SLIJ up 8 cents with a big move in silver. The silver stocks have not made a new high. Gold stocks did outperform the silver issues on this wave. I think that's going to change after this next correction, and silver will begin to outperform. It is today, but I wouldn't be chasing any of these. I'd be waiting for a break to buy in the miners. I think the place to go is probably going to be risk on, and it's going to be very important for the S&P case too. So I'm expecting a dollar turn to be supportive for equities, not a flight out of US dollar denominated assets. So here's a narrative for this week. Looking for yields to peak. Here's your 10-year. Okay. It's confirming everywhere. Minor divergence. Minor divergence. Nope, about over 80. So I still think we're, here, this could be drive 1, drive 2, we pull back, make another shot up into the ECB or later in the week. But anyway, I'm looking for yields to correct. And it could be a pretty sizable correction now that you have everyone leaning one way. I mean, it's been one hell of a move from 170, a full basis point move. Why can't we pull back a basis point? 280 back to 230. And then if it doesn't hold 230, you could be looking at 180, 190 again. So this would catch the crowd flat-footed. You guys also know I've been very bearish at copper. Copper's about construction. The metals are about destruction. And this was good trade selection on my part if I have to validate myself rather than shorting the precious metals. Because copper, as I've said before, there's a demand for copper, but there isn't a supply chain issue. Russia isn't a big producer of copper. It all comes from South America, a lot of it, and the US. So, mainly Chile. So there are a lot of copper bulls out there, and I've been talking about it since it made its peak. This looks like a failing rally to me. Stock people have been using Freeport as a proxy for it. They don't want to trade futures or CFDs in copper. Still looks kind of heavy to me. Really would have to get through 46 to get something going to 40. But, it's not hurting you from when I was talking about copper putting in a possible top. I hope you guys took it seriously when I was talking about crude being 61.8 up here, where it looks like a failing rally. I know a lot of people, this is major support. I wouldn't get short now. So let's see what happens at this major support level. But 61.8 definitely put a cap on this market. The oil shares have didn't really give up the ghost until last week, but we start taking this out and measures quite a bit lower. Again, I've been talking major support at 80, but I would expect that there's possibility for another bounce from this support level. The key will be, will it be as strong and as directional and impulsive as this last bounce from major support? If it turns out to be something less, with less power and smaller recovery, and only corrects this decline, maybe back to 103, 105, 107, and then starts heading lower, I think you have, I think that President Biden's going to be happy with oil prices going into November, which is something no one expected only 3 weeks ago. That, I'm not sure if gas prices will come down. They say that prices, the cash price for prices go up on a rocket ship, and so do the retail prices. But in retail, they come back down on a parachute. So you'll still be spending a lot on Memorial Day weekend, putting gas in your tank. So that's really the look. It's a very important week in the euro. I'm still looking for a dollar high. As I said, we need it to close back under that triple top, and I just want to give you the dollar weekly off number. So here's the off number. You guys may want to try this method, and it gives you reversals, and also you get a lot of good technical action off it. So all you have to do is, from this week in the dollar, and this is a weekly chart, count back 2 candles and then go to the close, and the close is 98.56. So we're about 130 points above it, but closing back under this by Friday would be the first 2-week reversal we've seen for a while. And as you can see down here, once we take out this level, making it a false breakout, and then this level, which was a breakout over these highs, there's a lot of confluence between 95 and a half and 94 and a half. I think we'll be there in the next quarter. So if you like what we're doing here, give us a like. If you have any questions, come on into our room. I'm looking forward to being with Mike tomorrow. Maybe we're going to have this turnaround Tuesday in the S&Ps. I think we're going to have an important test. See where NASDAQ, if NASDAQ's going to pull back towards that right shoulder, and watch the semis for a possible 3 drive to a bottom formation. So I noticed that last week when I was looking at them, that it looked like they had another low in them. So they've been, one of the groups most hit and weak. So maybe they're the ones that snap back the most. It still looks like we have some more downside. This low has to be taken out at 237. So it still would take a little bit of weakness for that to happen. But for me, my focus, even though I cover a lot of markets and sometimes I do get sidetracked, but I'm going to pay attention to what happens in the dollar this week, because I think we're in a terminal phase of dollar strength. I want to be prepped and focused and laser focused on this, because I think it's a major inflection point coming up. I've waited for the dollar to rally to these levels for a long time. I was constructive the dollar. I no longer want to be in dollars. In fact, what you may want to consider is, if you have a lot of cash and, it's just sitting there earning very little interest, is diversify your dollars and find a bank or set up an FX account and look to get long without a lot of leverage, and diversify your dollar holdings to have some other currencies in there, just in case I get lucky and I'm right about a dollar top here before the end of April. Okay, so everyone, see you tomorrow. I'll be here with Mike Venezia. I'm going to see what Mike's going to be looking for if we hold the support. and we'll see what happens. Really, I think the dollar is just going to probably jostle around until Thursday. So good hunting in the meantime, and I'll be back with Mike tomorrow. Remember, don't just count your pips, count your blessings. Adios, everyone. Good hunting.